Thank you very much, David. Afternoon, everybody, or good morning if you're in Perth. Thank you. At Akora Resources, we see a premium grade iron ore future with a low capital cost, low operating cost, direct ship ore, DSO, startup. Next slide. We have 3 project areas in Madagascar, which is our focus for the iron ore that we have. 2 initial projects that we had, Tatra Marina and Ambody Lafa, are now our future focus. And since acquiring those, we've got Beki Sopa, which is our focus project in south central Madagascar, some 250 kilometres from the port towns of Toliara and Morombe. The attraction for Beki Sopa is the outcropping iron ore along the 6-kilometre strike at surface, the image in the top left-hand corner of the slide. Those lumps of iron ore at surface, quite significant lumps, but also some finer ones, are grading 66.7% iron. And in the trenches that cross the 6-kilometre strike, in those trenches, we can see both lump and fines iron ore, the 2 main products for the blast furnaces, grading again around 64 to 68% iron. And at Beki Sopa, it's because of this that we see a low capital cost, operating cost, DSO startup, focusing on both the outcrop and the weathered zone iron ore. Next slide, thank you. On the right-hand side of the screen is the magnetic intensity image. We walked the ground, some 400 kilometres, 50-metre spacings, and what we see from that work is a very intense magnetic anomaly over 6 kilometres of strike from north to south on our tenements, the very red and orange intense area there. Over the top of that are the green dots for our drilling. We've drilled 63 holes in the last 15 months for some 6,000 metres drilled. And this has confirmed that the iron mineralisation at Beki Sopa continues below the high-grade outcropping rocks at surface to depths of 300 metres down dip and still open at 300 metres, along the full 6 kilometres of strike length and across the widths of the strike up to 750 metres, particularly in the south, and true thicknesses of the iron formation of 50 to 170 metres across and down dip. These results indicate a significant iron ore body. And when you consider we've only drilled some 30% of the 6-kilometre strike, there's a lot more to be proven over time. And these results are only on our main tenements. We have other tenements 10 kilometres to the southwest, which we have yet to do work on. So quite a promising future at Beki Sopa. Next slide, please. Next 2 slides are looking at some of the cross sections from the drilling. This is a cross section in the northern zone. The pinky brown color there is the iron formation, a true width of 67 to 70 meters in thickness, down dip to 300 plus meters below surface. And at surface, we're seeing high grade iron ore, 64% grades there on those 2 drill holes. The benchmark grade that we hear the iron ore price about is for 62%. And currently that's around about $155 a ton. So for 64% DSO, you get a premium over and above that benchmark grade. And our plan is to selectively mine this high-grade surface zone as the startup at Beki Sopa. Next slide, thanks. A cross-section in the central zone. The iron formation is not dipping as steeply. It's still dipping to the west. Thickness there of 70 meters. It's open at surface and at depth. And the structure is ideal for a low cost, low strip ratio mining operation. Next slide, please. Last week, we announced the first half of the Maiden Resource at Beki Sopa. This resource is only focused on the northern and central zones and has been completed in 15 months since we IPO'd on the ASX. The total resource is 84.5 million tonnes at a concentrate grade of 67.6%. So a premium grade product for that 84.5 million tonnes and a Davis tube recovery result of just on 40%, which compared to existing operations and developing projects is a very good number. Often it's half of that, which is a good result for us, and it means less tonnes mined for each tonne of product produced. As I mentioned, the first half of the resource is only on the north and central zones, where we have drilled 25 of the 61 drill holes that intercepted iron ore. The southern zone exploration target is estimated by our consultants to be between 50 and 100 million tonnes at comparable grades and recoveries. And we expect to announce that in the coming weeks. And we're looking at a number probably around the 80 million tonnes in that southern zone. Next slide. Again, we've gone back to the magnetic anomaly, the drill results there in the high intensity magnetic zone there. Taking that across to the central image, which is a plan view of the geological interpretation of the resource. The north and central zones were reported, both around 40 million tonnes each. And if you look in the bottom there, the area of the southern zone is significantly larger than the northern and central zones. And that's why we're expecting quite a significant maiden resource result for the southern zone. Next slide, thank you. This is also another image, an oblique view, to give you some size of the volume in these areas. The northern and central zones there on the left-hand side, again, around the 40 million tonnes. The green crosses and lines are the drill holes and the drill hole results. And what you can see there is that the expectation is for more resource at depth, but also to the west in both the north and central zones. But looking at the southern zone, where we're going to report in the coming weeks the resource, it is a larger surface area and quite a significant cross sections. We're seeing cross sections there of 150 to 160 meters. So quite a large resource is expected from that southern zone. Next slide, thanks. In parallel to the drilling work over the last 15 months, we've also conducted product grade trials. These are trials where we've crushed the drill core to 2 millimeters, which is a fine iron ore product, and we've crushed it and ground it finer to 75 microns. And what we're seeing are high to premium grade products at coarse sizes relative to existing operations and developing projects. On the left-hand side are drill core results there for one of the composites going down to 37 meters below surface. At surface, a grade of 59%. At depth of 32 to 36 meters, a grade of 63%, which is DSO product. When we've combined all of these drill results into the one table here, what we're finding is that head grades from 30 to 45% iron in the iron formations readily upgraded a 2 millimeter crush, a fine iron ore product, to 64%. Again, a high grade iron ore outcome there. And at 75 microns, we're achieving 70% iron ore at 75 microns. Existing projects around the world, whether that's in Canada or other parts of Europe, they're grinding to 15 and 20 microns. So more capital, more operating costs than what we would expect at Becky Soper to get an equal, if not better grade product at 75 microns. Not only is the iron grades high, the silica and alumina, the impurities, are low and in specification, and phosphorus and sulfur are very low. As you can see in the numbers at the bottom there, 002 for phosphorus and 005 for sulfur at very good mass yields. Next slide, thank you. So at Becky Soper, we're anticipating a high-grade direct ship ore startup. Direct ship ore means that the ore in the ground is on specification. It needs to be mined by conventional methods and crushed to size and shipped to the customer. So low capital and operating cost startup at Becky Soper, focusing on the outcrop and the very high-grade surface zones. The drill core boxes here, you can see grades of 64 to 68% iron. These will just be crushed to produce a lump product, which is 30 millimeters in size, thereabouts, and a fines product and DSO, average grade potentially around 65% iron, a good margin above benchmark. Next slide, thank you. After producing the product from the high-grade areas using selective mining, we'll then move into the lower-grade iron ore that we're seeing across strike and along strike. And from the weathered surface zone, this readily upgrades to produce a 65% fines product, and then at depth, a 62% fines. The next slide, thank you, David. So what we're seeing is lower grades of averaging 27% here, upgrade to 71% iron ore. Pure iron ore magnetite is 72.4%. So this is a very high grade product with low impurities. the attraction for this product is this is what's going to be sought after and demanded by the steel industry as it decarbonises. So Akora is very well placed to feed the green steel future. So I think, is that the end there, David, for me?
No, keep going. If you've got a few more slides.
Okay. Excellent. So the next slide, thank you. So what's next? We've proved up half the resource at 84.5 million tonnes, and there's more to prove. The southern zone will be out shortly, and the target is between 50 to 100 million tonnes there. We'll then do further mineralisation and resource work over the year, but importantly, we'll start studies. Now that we know what the size of the ore body is, we'll start doing the studies on transport logistics, the port, mining and processing, operating and capital costs, and power, which likely in Madagascar will be solar energy. We'll also do some geological work on the near Bibby tenements, which has got the potential to expand the resource beyond what we've already reported and better understand the opportunity for Akora to provide the green steel future. The last slide, please. So in the resource that we've already reported, we're seeing 64% iron at surface, which is potentially DSO, higher than the benchmark grade of 62. We can produce a high-grade fines product at a crush size of 2 millimeters and a premium grade product better than 68% at a 75 micron size, which is coarser than most with extremely low impurities. On the top right-hand slide there, it's the iron ore price over this year. You can see it's improved quite substantially for all grades of iron ore, 58, 62, and 65. Our attention is the 65% iron price, which at the moment I think is about $185 US a tonne, which would be a wonderful price if it is maintained over the next years as we bring Bibby into operation. So thank you everyone for your time.
Thanks, Paul. A great presentation. Question without notice. A high-grade iron ore project, outcropping with significant resource and mineralisation upside. Yeah. How do you get your hands on a project like that in the first place?
Very good. My colleague John founded the company. We had those projects on the East Coast. It was hard to get funding for those sorts of projects because they typically have higher capital and operating costs. So John is a prolific reader. He was aware of the history of Madagascar and the iron ore project, which was sought after by some European countries during the First World War. He then did some more digging and found that the tenements were owned by a US company. Their focus was on coal. He made an offer to acquire those tenements, and which is what we've done. And recently we completed the deal, and then remain focused in shares. I continue to be a shareholder because I like the opportunity and the future prospects for the company. So by doing some reading and then by doing some good research to track down the owners of the tenement, it's been very beneficial for all of us.
Oh, and clearly further opportunities ahead.
Yes.
In terms of, and I know the studies haven't been done, so this is a very conceptual conversation, but getting the product to the coast and the best port to ship from, has that been thought through, or is that the work to be done?
Very preliminary work, David. We've travelled the ground to look at it. We understand Toliara is a port now. It's a port for a range of products, including mining products, but also Morombe, which is further to the north and probably a more direct route for our project. This is the main study we have to do this year. It's one of the questions I get asked the most. What are the logistics like? Because moving tonnages of iron ore is really a logistics project as much as a mining project. 250 kilometres to the coast sounds like a long way, but I can assure you that the projects here in Australia in the Pilbara, they're sort of 300 to 400 plus kilometres from the coast, not all on rail. A number of those are trucking. Brazil, which is a big player, 1,000 kilometres. Kumba in South Africa, 700 to 1,000 kilometres. So there'll be obstacles in that 250 kilometres, but relative to others, achievable.
And a final question, offtake. When do groups, maybe for to educate the audience,
Yep.
When do groups from an offtake perspective start talking to yourself about potential offtake, and how positive do you think that interaction will be?
I can only speak about my experience with Becky Soper. They typically start as you're getting close to announcing your maiden resource, because the maiden resource is the definitive result from all of the drilling and exploration work. It identifies how many tonnes and what the grade is and what the opportunities for products are. So that's when they start, and soon after you have the resource in place, you have a chance to realise an offtake agreement or something similar. So that's, for us, is quite a major milestone, and those discussions we hope will be progressing, and something might come from that.
Thanks, Paul. A great presentation, a really interesting project that I think shareholders will continue to watch with interest over the coming months ahead. Akora Resources, stock code AKO. Thanks for your time, Paul.
No, thank you very much, and appreciate everyone's support and interest.